Welcome to the 2025 Economic Preparation and Depression channel. I'm your host, Tony. Thank you for joining me on this July 1st, 2025 edition, Tuesday. Please be sure to hit that subscribe button and like button on this Preach to Me channel as we continue to bring you the latest interpretation of financial news as it becomes available. 100% appreciate your support. We're going to be talking about we're in the summertime months now, and that means the Dow Jones is volatile. Dow Jones went up 400 points today. S&P 500 closes flat today. We're going to be talking about what are some good paying jobs that could possibly be out there according to one media report sponsored by CBS June jobs report. We're also going to be talking about the price of gold continuing to be elevated along with silver elevated. So let's get right into it. CNBC.com was reporting the Dow Jones jumped 400 points. S&P 500 closes flat to start, quote, new quarter. Now we're in the third quarter firmly here as investors rotate out of tech stocks. As you know, tech stocks were going down, such as Nvidia and other places, companies from January on to currently, but now we're kicking out the second half of 2025, and President Trump's giant tax spending bill has just passed the Senate and is on its way to the House floor as we speak. And the comments from Federal Chair Jerome Powell, who's continuing to battle high inflation, high prices, and low stagnant wages in America. And so he has a decision to make here coming up in the next Federal Reserve meeting. And that's what he's going to be. People are going to be wondering whether or not he's going to be cutting these rates, considering mortgage rates are still above 6.5% at the lowest. So we continue to see here Dow Jones closing above 44,494.94, up 400 points on the day as trading closed at around 4 p.m. Eastern Standard Time here. So we can send things continue to look good, or at least quote unquote on Main Street. Wall Street's enjoying the closing highs on S&P 500 and NASDAQ, but they finished in the red today. So we're going to continue to see high incomes and good work-life balances. According to Money Watch, CBS.com, and Jill Schlesinger here, she says that what U.S. cities have the best job markets. Now, this is relative. Remember, official unemployment, is at 4.3%, right? But we know that real unemployment on this channel is at 12%, we count the young people that are coming out now, just graduated in May last month with the college degrees, even in the STEM fields, even in the science, technology, engineering, and mathematics fields, are taking longer to find jobs. I just talked to a guy who graduated, young gentleman who graduated with computer science, computer engineering degree, and he's been looking for jobs for the past 4 or 5 months, and not a lot of bites, even out of Silicon Valley. So where you look is just important. And so overall, according to this report, there's just one report, so don't take it as the gospel. But Bend, Oregon has the top job market in the United States, according to this CBS News poll, according to Smart Asset. The West Coast city notched points was low unemployment rate at 3.1% and high income growth. So from 2020 to 2023, the median income in Bend, Oregon grew 44%. This is the fourth highest after Richmond, Virginia, 50%, Nampa, Idaho, 47%, and Dayton, Ohio, 45%. All these may sound like very boring towns or cities, but apparently, according to this report, they have a pretty good job market. So Bend, Oregon stands out for its work-life balance. As you know, it's a hub for outdoor recreation, much like Portland, Oregon, and Seattle or Vancouver. They're very known for that outdoorsy type of mountainous lifestyle. The median commute time for Bend, Oregon is 16 minutes, with just over a quarter of the city's population working remotely. So that helps too. They can get out of Oregon on the weekends or another holiday and stuff like that. So another thing to keep in mind too is a lot of people are working from home, were working from home, and so that gives the flexibility to move to different cities that you may not necessarily consider a prime real estate location here. So here's the chart, ladies and gentlemen. 348 cities were ranked across unemployment, income growth, housing affordability, health insurance benefits, commute times, and remote work. And Bend, Oregon came out on top on all those metrics here for that. Now, as you can see here, most of these cities, the top 4 or 5 cities, are located either in the Midwest or in the West, besides Richmond, Virginia. The rest of them are located a lot of West Coast cities here. You can see Santa Clara, California. You can see Westminster, Colorado. Sunnyvale, California, of course. Austin, Texas, another big one that a lot of people. Scottsdale, Arizona, another place that people were moving to. I don't know if it's pre-pandemic or a little bit after post-pandemic, but surprisingly, St. Louis, Missouri's on here. Nashville, Tennessee's been growing. I heard a lot of people moving there, and also Cary, North Carolina, of course, obviously with their industries and the Triangle, Research Triangle. So you can see here that which cities have the highest percentage of healthcare coverage for workers. Santa Clara, obviously the Bay Area, because of the tech companies there, Google, Facebook, Apple, Meta, all those, Tesla. Of course, they offer great benefits like that. Over 88% of the population in the Southern Bay Area city have private health insurance through their employer. Exactly what I just mentioned. Cambridge, Massachusetts, another college town, of course. Harvard, Bellevue, Washington. Obviously, you got Microsoft, Boeing, all those companies there. And so, which cities have the shortest commutes here? You can see Wichita Falls, Texas, Abilene, Texas, Topeka, Kansas, only 14-minute commutes there. Remote work-friendly cities, Dallas, Fort Worth metro area, Frisco, of course, Berkeley, California, Charlotte. So they typically name the typical cities that we typically think of as supposedly growing here, allegedly growing at a higher pace than other cities. But that just shows you that there are jobs out there. The June jobs report, though, could decide the next Fed interest rate cut. June jobs numbers are due to arrive early due to the 4th of July holiday, so we possibly could get them tomorrow here at 8:30 a.m. Eastern time. So we know with the trade wars causing a hiring freeze, and many governments have been on hiring freeze, local, state, and federal. Also, we know the private sector have been quietly laying off a few workers here and there to make ends meet. Artificial intelligence is taking human jobs away, as you know, and the immigration crackdown is shrinking the pool of available workers. So there's a lot to worry about in the U.S. job market these days, but as you know, this global volatility is going to be here. So once this job report comes out, it could dictate whether the Federal Reserve Bank will cut either 25 or 50 basis points. I don't think they'll go a full point as President Trump had hoped for, but they may get up to 50 basis point cut in the next FOMC, Federal Open Market Committee meeting, which is scheduled to take place sometime in the middle of this month, 18th to 19th of July, or maybe even early next month. So in any event, gold is continuing to go up. It's at $33.09.94 per ounce here. Silver continues its assault as well at $43.36 an ounce. It's the spot price that it's been trading at here. So there's about $11 to $12, $13 over spot price here. It's actually $36 an ounce in real time, and gold, of course, is up to $3,300 an ounce. So we continue to see those precious metals doing well. We continue to see cryptos doing well, even though it's kind of flatlined the last 2 or 3 months here. Someone can fill me in on that data. But the bottom line is continue to diversification of assets here. Continue to diversify between hard assets, downsizing your lifestyle, whether that's downsizing from a 5-bedroom, 4-bedroom house down to something more manageable as you get closer to retirement years, or you're already in retirement years. Also, getting in better shape, physical shape, so you don't have to rely so much on the health insurance and stuff. Eating better, sleeping better, resting better. Things of that is going to make a huge difference as we continue to head into this slowdown and severe recession that we're going to be seeing later on this year and next year. And so just continue to be blessed as we get through this work week or independent week or wherever you may be on vacation. I know 4th of July is coming up. Have a blessed holiday. I'll continue to come on throughout the holiday to bring you the latest. Take care. God bless. Be sure to subscribe and share this with your friends so that the word can get out here about this channel. Thank you. God bless. Take care.